Hello, my name is Phil Hindman. I've been in the business over 20 years, as evidenced by my gray hair. Also, as a baby boomer myself, I feel I understand the concerns associated with a reverse mortgage. So let's get started with some basic eligibility requirements. The minimum age of the primary borrower must be at least 62. Your home must have sufficient equity. Any existing mortgage must be paid off with the proceeds of the loan. Your home must be your primary residence. And you must meet the financial assessment requirements and other HUD guidelines. In 2015, HUD made 4 important changes to their guidelines to help protect borrowers and lenders. The first change was to implement a financial assessment requirement. This requirement looks at a borrower's monthly income and expenses. After expenses, lenders require that single borrowers have at least $529 in disposable income. For couples, that figure is $886. The financial assessment also looks at credit history. Although there are no minimum credit score requirements, lenders do look closely at the last 2 years' credit history. If a borrower fails to meet the financial assessment requirements, a lender still has the option to approve the loan by requiring a LISA, the option known as Life Expectancy Set-Aside. A LISA is an escrow account based upon the life expectancy of the borrower. The funds are used to pay mandatory expenses like property taxes and homeowners insurance. Another 2015 change now protects a non-borrowing spouse under the age of 62. Although not on the loan, a spouse can now remain in the property if the primary borrower passes away. Lastly, HUD reduced the loan-to-value to help retain more equity in the property. This, among other things, helps the borrower if the sale of the property ever becomes necessary. So let's finish up with some key features of a reverse mortgage. No monthly mortgage payment is required. It allows you to stay in your home as long as you maintain your property taxes, insurance, and lender requirements. Another great feature is that borrowers can control how they receive their funds. In general, there are 3 ways. A lump sum can be distributed at closing. Borrowers can set up monthly cash payments to be received for a set term or for a lifetime. And finally, a line of credit can be set up and even grow over time. Thank you for watching, and I hope this brief overview has answered some of your questions. If you're considering a reverse mortgage, I encourage you to call us for a free evaluation. If appropriate, we can get together, go over your specific needs, and answer all of your questions. Overwhelming customer reviews have proven one thing we always knew to be true, that a reverse mortgage is best handled locally and face-to-face. Thank you again, goodbye, and have a wonderful day.